For many Black entrepreneurs, reaching out to individual investors for money and advice is increasingly important to help ensure their companies not only survive, but grow and thrive. We talked to two startup founders about funding for early-stage companies and how to find the right match. Disappointed with the local dating scene in Washington, Nasa Shelley, an attorney, saw an opportunity.
When I looked for a matchmaking service, I looked for a dating app, and I couldn't find anything that catered to professional Black women.
In 2018, she founded Carpe Diem, a dating app and matchmaking service. To fund the business, she sold her condo, drained her savings, and raised money from friends and family.
The growth and revenue potential is massive.
As the business has grown, Shelley has raised nearly $2 million and continues to make her case to investors for funding to enhance marketing, hire more matchmakers, and expand into other cities.
I can't understate the value of getting capital into the hands of minorities and especially women of color to help them fuel their businesses.
I think there's a unique drive for success because of a lack of resources and the necessity to drive optimal outcomes with less support and less capital.
Matching investors with opportunity prompted Jason Ray to start his own wealth management firm based in Philadelphia in 2019. Many of his clients invest in early-stage businesses.
The first thing people should think about is how it frames into their investment policy or financial plan and why they're investing in startups.
If clients want to invest, he advises they know how the company operates and its competitive advantage, evaluate the management team and its track record, and most importantly, understand the terms of the investment.
If the valuation on the company is too high and you as an investor are not getting enough rights or ownership or control or whatever it may be, that may not be the right deal for you, even if the management team and the company has great competitive advantages.
Carpe Diem seized the moment and now has a revenue-generating business.
We have customers, we have members. It makes it a little bit easier coming to the table and advocating for additional funding from investors.
Now, many startup founders say finding the right match starts with finding people who want to invest early and who can offer advice and mentorship to help grow the company into a thriving business, Brian.
But that is risky, and it takes money. So how much money does it take, and how risky could it be?
Well, it can be very risky, and there's no guarantee that you're going to even get your money back. A lot of startups are not successful and do not have positive returns. But what you want to think about is if you want to be an accredited investor and perhaps an angel investor and getting to an angel fund, it's important to have at least $200,000 of income if you're single, $300,000 for married couples, or a net investable assets of $1 million or more, not including your primary residence.
I got to imagine, because listen, a lot of companies, most companies ultimately fail. So given that, for goodness sakes, don't put all your money into one company, right? I mean, unless you're really a gambler.
Absolutely. You want to make sure you can spread it out and don't have more than maybe 10, 20% of your portfolio in any startup ventures, because you want, again, this is not money you can have access to. This is money that you're going to perhaps lose. We want to make sure that you get more advice and join us for a free virtual CNBC Women and Wealth event on March 5th at 1 p.m. Eastern. We're going to bring together top financial experts to help you build a better playbook, offer practical strategies to increase income, and identify profitable investment opportunities. You can scan the QR code right there to register or visit cnbcevents.com/womenandwealth.